morning. Good morning. I hope everybody's having an amazing start to your week. It's the month of March. It's my birthday month. And, of course, that means I'm celebrating the entire month. And I'm going to start sharing some of those celebrations with you in the accelerator community. But I'm happy that you're tapped in. If you joined the book club last night, the Notes book club last night, it was extra lit. Deshaun Outlaw made some incredible predictions, and we're going to revisit some of those on the charts. I did a little bit last night on the Notes book club, and I said, what a way to start March, but with a bold prediction, and either find some things on the charts this morning on our major indicators that line up with that bold prediction, or we're going to challenge it. So let's get right into it. So we're going to start let's start with our indicators this morning. We want to make sure we got that really set for us and make sure we're really tapped into what those things are. So I'm going to start with the VIX, and let's see if we got it on the right one. Yeah, let's switch our view on this one. Go over to this layout. Got a little bit better markup on this layout that I like to look at. So you guys know I keep these levels on my charts all the time. Anybody on the trade team, anybody in the accelerator community, I have these levels. They've been on my charts now for about 4, maybe 5 years, something like that. But that's 37.22, 20.58, 14.35, and 11. We've been sitting comfortably for the most part. There's been a couple spikes out, maybe about 6-7 spikes outside of this 20 range and below this 14 range. But for the most part, we've been sitting in this range since last year, August, comfortably. Just sitting back, relaxing in this 20 to 14 range comfortably. We just got to the top of it over the last few days of the month. And then to start the month, we're sitting right at the level and climbing a bit. So on Friday, we dropped back inside. Today, we're climbing up above it ever so slightly. Now, how does that work? Just for a quick refresh, if this is your first time seeing this chart like this in the community, I want to make sure you know the correlation, the volatility S&P 500 index, which is better known as the VIX, is what we're looking at. Traditionally, when you see the VIX climbing, you're going to see a slightly inverse correlation with the S&P 500. So now that we've gotten a view of where the VIX is for today, where it's been kind of trading over the last 4 or 5 days, right around this 20 mark, we can go take a look at the S&P 500 itself, right? So if you look at the S&P 500, we had a climb on Friday and we're retreating today. So if we go back to the VIX, you're going to see a decline in the VIX as far as the actual index number and a push high on the VIX today. And you're seeing the exact opposite on the ES. Now, this isn't exact science, of course, but the VIX measures the volatility of the S&P 500. So there's obviously going to be a correlation. And if you notice, if you go back, take your time on your own and mark these spikes. So January 13th, January 27th, and then even as February 28th, kind of that last week of the month. And you can even go back and look at 18th, 19th, and the 20th of December and plot on your S&P 500 chart where the market was compared to where the VIX was. And then you can do that for the levels, excuse me, you can do that for the levels down below as well. So take your time, do that. I got an idea of what's happening on the VIX. We're also, from an ES standpoint, we're also caught kind of in a broadening wedge pattern. How that pattern works traditionally is you're going to get some resistance at the top of this trend line, but it's going to continue to create higher highs. And at the bottom, you're going to continue to create lower lows. Now you have a couple in here that, are almost at the same height, but these two can't really argue with them. Now, if we come down and touch this, what could continue to happen is we could just keep doing this, which is a form of a consolidation pattern, until either the bulls or the bears step in and say, nope, this is where we're headed. So this is roughly where we are on the ES, just to give you an idea. We can take a look at the Dow as well. Had a failed attempt at this high. That's what my little sad, angry face was for the bulls. We had a failed attempt on the ES. I'm sorry, on the Dow. And then you can see this previous high. I'm going to go up to the monthly chart. I've got this 43,571 mark, and this was just the high from October. But it's muddying that up pretty bad. So I'll eventually probably move it. But for now, I'm going to keep it right there just so I can kind of see what's happening at that level. Now, if you look at the Dow specifically, you can see it is ever so close to an equal high. This one just barely got above, but I still call it a failed attempt. Cleared out some stop losses from this previous high and turned it around. And down here, you can see we're making higher lows, right? So this was a low, this is a higher low, and if this one holds up and it breaks to a new high, this would also be a higher low. So we're actually in kind of a channel / upward trend on the Dow, whereas we've seen lower lows on the ES as well. Then taking a look at the NASDAQ, or the NQ, the futures, you can see I had a head and shoulders mark to take us higher. That didn't happen. It ended up breaking below. So I'm going to clean this up with you live so you can see. I want to get this off. Because that didn't hold up. This break and retest did, but it's over with now. Now we're going to take a look at it and see. This 20,972 is the July 24 high. You can see we broke above it, kind of held support a little bit here, and then eventually broke down. What I do think is super interesting, and this is something you always want to take a look at. When we got to this high back in December 24, we failed to get back above it before making a new low. That puts us firmly in a 1, 2, 3 move, right? To identify the trend. That's one, an impulsive move down, a pullback to a 2 move that doesn't quite take out the previous low, and then a break below this low. That puts us firmly in a downtrend on the NASDAQ. Now, when we talk about bold predictions and possibly being in a bear market, one of the things that I've always noticed over the last 5 years or so is that the NASDAQ tends to get to the spot faster, right? I play basketball, so, I'm always thinking in basketball terms. The NASDAQ is like a penetrating guard on the basketball court. They're going to break somebody down and penetrate, get to the goal. That's the NASDAQ. It leads the market, whether that's down or up. It's going to get there faster and oftentimes correct or be more impulsive faster. So that's what we're seeing on the NASDAQ versus what we see on the S&P 500. Obviously, there's 500 companies there, a little bit more stable because there's a little bit more diversity versus the NASDAQ being primarily tech companies. So we got a break below. We've retested this previous July 24 high, and it looks like we're headed lower right off of this. I'm not quite ready to trade the cues on this, but this definitely supports us potentially going lower. So we talked about getting some of these bear levels so that we know what's coming. So I'm going to just grab an info line. And, the rule of thumb is what, 20% for a bear market? I'm going to go up to the weekly just so we have a little bit more insight. So that's roughly about 17, and you can clean this up on your chart. That's about 17,974. And I'm going to go ahead and label this. This is something that I'm trying to do a much better job of this year. But I'm going to go ahead and label this level bear market. And you can clean up the exact percentage. But we'd have to get down to basically 17,974 on the NASDAQ for us to be in a bear market. What do I see going on around it? Not too much. There's a spike here and a spike there, but nothing very specific. I can also grab my Fibonacci and see what I see there. So I'll grab the previous low up to here. And what we do have that's extremely close is this 38.2 retracement that lines up almost perfectly with this line that I've put here for the bear market. Now, again, I know that's not perfect. So maybe when I go back and measure it out, it will be. So I'm going to just put that the 38.2 is there as well. So again, we talked about this bold prediction that Deshaun made. And I mean, that's a long way down. Don't get me wrong. But when I think about the correction, it's not even retesting this previous high to get here. You can see where I marked the last quote unquote bear market back in 2021 and the drop down to 2022. It was a 37% correction back to this point. And if you notice, it didn't go back to the pre-COVID high in 2020. It fell just shy. This would be repeating the same thing. I'm not saying that's what's going to happen, but this would be repeating roughly the same thing if we got back into this area, not quite getting back to the previous high without challenging it. So those are some levels. Another thing I've got on here is my trend-based Fibonacci, and I'll draw it again. I'm going to take it off and then I'm going to draw it again for you so you can see how we have gotten to these levels. So I'm going to pinch this I'm going to actually go up to the monthly. So we're going to go from the COVID low, which is right here. And for those on the trade team, they'll remember me saying this the further we get away from the March correction, the drop in March 2020 for COVID, the less and less it would look like anything. And you can see it absolutely looks like a blip on the radar right now. Of course, the most recent bear market looks really big, and eventually it's going to look pretty small. But this one was so quick and we got out of it so fast that it looks like almost nothing on the chart now. So grabbing this trend-based fib, this is going to allow me to see that we completed a one move back here in July 24 on the NASDAQ, and we're very close to an extension on the fib and the trend-based fib. Don't know if we'll get there or not, and that's roughly around 23,000 on the NASDAQ. So those are some of those bearish levels I said I promised you I was going to tell you about from Deshaun's predictions. Those are some of those bearish levels on the NASDAQ. Now, let's go back and make sure we've got them for the ES as well. I forgot to add those for the ES. I'm going to go ahead and take this off so we can really get a good look. You can see here 27% correction. So the previous correction on the NASDAQ was 37% to get us into a bear market. Let's go ahead and grab our info line. And let's set this right around 20. Get it as close as possible. Just trying to get an idea. No, I was a little off. All right, there we go. So that's roughly where the bearish levels will sit for the ES. And we're going to go ahead and put that on here. And then we'll grab the fib. Need that right now. All right, so in this case, the 38.2 is above that bear market level, and it also lines up with the spike down that we had in August 24, and there's a 50% retracement just below, and that one lines up perfectly with this previous high from December 2021, January 2022. So I'm not necessarily going to put the fib level. I am going to draw a little box just below, and this is just how you get yourself ready for what could come. Not saying it's going to happen, but you'd rather be prepared for what may happen and it doesn't happen versus being shocked when something does happen and you weren't prepared to trade or do what you want to do. And part of why we're going through this exercise on the trade team and in the community is because we want to take a look at the stocks that we love, that we want to trade, and that we want to buy for those types of corrections. So that's what we'll be doing over the next week, is looking at the stocks that might fall into our prices to purchase long term, as well as to trade leaps and swing trades on. We'll do that preparation so we have just a little short list of maybe 5 or 6 stocks, if that, that we want to keep our eyes on for this particular purpose. So we're ready when the time comes. We put them on a watch list so that we know what's happening. So today I'm gonna give you the bare levels, and then over time in the community we'll start talking about the specific stocks that may be hitting our range from our personal watch list. And if you got a chart you want me to mock up right now, let me know. Drop it in the comments. I'm almost done looking at the indicators, so go ahead and drop those in the comments. One thing I want to share with you all is also the dollar index, and you're gonna see a ton of lines on this one because I keep my quarter points on this chart. So let me go to this other one, see if it's a little bit cleaner. Yeah. I'm not gonna go through in detail like I did with the VIX, but you'll see a correlation with the dollar and the broader market as well. And overall, if you look at the dollar index, you can see that it's just been climbing out of this hole since '08. You can see this is let's get this exact period of time. This is roughly, I'm trying to find, it's probably right there. So that's March 2020, so that's COVID. And you know the market itself was down at this point, right at this point, and you can see there's a bit of an inverse correlation with the dollar and the broader market. So while the market was dropping, the dollar was going up and then started to drop as the market started to rebound. Again, not an exact science. Take your time, drop a few vertical lines on a chart, and then just compare them. You can add, with the plus sign up top, you can add the ES to the side pane, to a new price scale onto your chart, so you can get a line chart of the ES at the same time. That's a way to look at it. You can side by side it with 2 charts if you want. Either way, just take your time, walk yourself through it, and I believe you'll find some correlation, and it'll be something else you can take a look at when you're looking at market reversals, market changes. And sometimes these particular indicators will let you know, not necessarily like years in advance. I guess there's probably some things that could help you years in advance, but it will definitely help you confirm in the moment, in that week, in that month, what could be coming next. So take a look at that. I want to take a look at Intel. It is on, I'm adding it to my Q1 watch list to trade, but specifically I wanted to take a look at it this morning. Go down to the weekly, because it obviously getting to a level, right? Getting to a major support and resistance level. I'm gonna go ahead and take a little bit of this off. We were potentially anticipating a new low on this. We had a setup to trade it back to this support. Now we're here. So let's talk about it. Get rid of that too. We were eating this thing up. Coming out of this break and retest, we traded it. Wanted to catch it off this head and shoulders. I shared what I was gonna do, but I actually missed a trade myself. So now that we're back up at this level, one of the things that's interesting about this particular trade for me is the fact that we cleared out this level and made a new high. Let me get rid of these two so we can look at this down here. So the reason why this interests me is because when we got to this point here with that head and shoulders, which is why I was convinced to take the trade up, is we didn't break below this low. So if we put just a quick horizontal line here, you'll see that price didn't get below this point, which means it created a higher low. And then when we got back to start challenging this previous high, we made a new high. So that puts us in a 1, 2, 3 move, and this is on a weekly. And when I switch it to the daily, you're gonna see that as well. Grab my arrow. So that puts us in a 1, 2, 3 move to the top side. So how would I want to play this? Well, initially I would have liked to see this support hold up at 25 and we get a 1, 2, 3 move above, which is what we're going to need. But you can already see I put an alert at 25.31 in hopes that it'll cross. If it crosses over and we start to see some price action to the top side over 25, we'll have a trade up. And now that we're back below, I'm still going to consider a possible trade to the downside, but it's tough with this price action to say, yeah, I'm going to bet against the trend. It's not something that I do. So you see these markings on the weekly for the 1, 2, 3 move. You're going to see the same thing inside of that move. And actually, let me use my path tool so you have a different color. I don't use that one as often. I probably should add it to my favorites. There it is. So you have 1, 2, because it didn't take out this previous high, and then an impulsive move to the top side. This could be another 2 move headed this way. But it's got to get above, of course. So this is one that I'm going to keep a really, really close eye on. And I probably need to put an alert just below as well, because if it does start to trade lower, I want to be prepared for it. And then just quickly looking to see if I see anything else that would support it going lower. I'm not betting against the trend, I can tell you that much. That's not something that I'm interested in doing. All right, so that is 2 very specific things that I'm looking for on this one. I got a trend. We can even use the Fibonacci. We're getting above support. It's right at the 50% retracement. Who knows? We could come back to the 61.8 before that turns around. We'll see. But this is one I want you to keep your eyes on and potentially add to your watch list. I'll be adding to mine to finish out this Q1 watch list. And then I wanted to also take a look at Bitcoin. I thought Bitcoin was at an interesting position, so I wanted to look at that this morning. I'm trying to see which chart we're going to use to take a peek at that. Let's look at, Coinbase. So I marked the head and shoulders on this one, and it looks like it's coming into play. And so I'll kind of put a little circle. This is what I'm considering the shoulder. Here's what I'm considering the other shoulder. And then I'm going to just put a rectangle on this double top, which is what I'm considering the head. Now, it's not your textbook head and shoulders, but it's giving the psychology of the market that we would traditionally see. If the market was going to go higher, it's going to fake people out. And I'll show you what I mean. So price made this impulsive move, did a basic correction, and we would expect it to go higher because it's on trend, right? And then it pulled back and stopped at the same spot. So you would expect if it starts to move up, it's going to continue to move up. And it actually broke this high. So on this pullback, the entire market is sitting there thinking, and you can see how the market stepped in right here and sent it really, really fast back up. And I'm more than sure there were some people in this trade at this point right here. I'm gonna actually make I want to make that just a little bit lighter on the chart, just so you can see the arrows. So on this spike down right to this level here, Everybody stepped in because it had been doing the same thing. So you would expect it to repeat itself on trend and break and make a new high, just like it did previously. But that's the beauty of a head and shoulders, is that if you've got it on your chart, when it gets to this point right here, you know that there's a chance that it could turn around, especially if it coincides with a fib level in the previous shoulder. And that's exactly what it did. It broke below what I'm calling the neckline right here, because this is where all the support was created for the shoulders and the head. It broke below right here, retested it, and looks like it's making a break much lower. And where could that head and shoulders end us? Well, that's 79,000. I didn't even realize we had that spike. Yeah, right there. That's in the 79. Looks crazy on the weekly chart, but we could see this head and shoulders complete itself at the beginning of this move, which is right around 59,000. Now, I'm not saying for all of you watching that Bitcoin's going to 59,000. However, would you be a buyer if it went to 59,000? That's almost half of the high in a very, well, I wouldn't say very short period of time, because this started in September. But y'all know, all my traders, my trade team members, and my accelerators, you know I love the head and shoulders. And you can see one down here. I'll go back and I'll show you the power of that head and shoulder. And this one's kind of elongated. I don't know how this got off, but let me put this where it should be. Actually, how about we just redraw the thing? Because it looks real funky. I don't know what that was. So you got shoulder, head, shoulder, right on a major level, right there. And you can see how it broke outside, retested, and then took off. Right, so that's a little head and shoulder within a shoulder. Because here's another shoulder. Left shoulder, head, shoulder. So this little shoulder right here was within the shoulder of a bigger head and shoulder, and gave more than enough confirmation that we were headed out. And now we've got one on the top side, a regular, this is inverted. We've got a regular head and shoulders that could potentially end up on the floor. So that's why I wanted to take a look at Bitcoin. Let me know in the comments if you are buying at 58, 60,000 on Bitcoin. Are you a buyer? And then if it gets there, now that means you have to be a seller of Bitcoin right now. So are you a seller of Bitcoin at 90,000, 642, 632? Let me know in the comments. I'd love to hear from you, and hope you enjoyed this Get Ready With Me session. If you're watching this back on the replay and you have any questions about anything, or have a chart you want me to take a look at, drop it in the comments and I'll be sure to do that. All right. Have a great rest of your morning. I'll talk to you soon.